All right, so now if I go back to change in cash, what we basically said was you've got two statements. You've got the statement of, so you've got the profit and loss slash statement of net income, and you've got your balance sheet, and changes from these have an impact on your cash position. So if you wanted to calculate your cash position, I think the starting point for you, the first step, is your net income figure. And then we make a few adjustments. We say, okay, are there any non-cash items in the statement of net income? And our big example yesterday was depreciation. So if there are non-cash items, we need to remove them or adjust them. So we make some adjustments for that. In Maya's case, right now, the way the statements stand, there are no non-cash items. So after the adjustments are made, then we need to calculate three specific items. The first item, item number 1, is essentially working capital, changes in working capital. So we calculate the net change, net impact in working capital, and the net impact gives us a sense whether working capital is going to be a source of cash or a use of cash. So if our payables are greater than our receivables, high level simple example, then our working capital is generating cash. And if our receivables are greater than our payables, then our receivables are using cash, right? So there's going to be some net change in cash. That's one element. I think the second element is investments. So if you've bought, if you bought printers that are going to run for a couple of years, if you bought land, if you bought equipment that has the life of more than a single year, that has not been expensed in the same year, you've capitalized it, right? So you've distributed the cost of that instrument, of that product, of that asset over a number of years. So if you've bought or sold fixed assets, that will again be a source or use of cash. If you've purchased something, it'll be a source. If you purchased something, it'll be a use. If you've sold something, it'll be a source. And then the last and final step is changes in financing. So if you've borrowed money, if you've raised equity, these are both factors that can have an impact on cash. So if you borrow money from a bank, if you raise debt, if you issue debt, that's a source. If you pay yourself a dividend, that's a use. If you repay debt, that's a use. If you retire equity, that's a use, right? So if you think in terms of structure, you start off with step number 1 is you take the net income figure. Step number 2 is you look at the non-cash items and you make adjustments for them. Step number 3 is you calculate the net change in working capital. Step number 4 is you look at what's happening on the investment side. Have we bought stuff? Have we sold stuff? Have we invested more capital and money in the business? And that is step number 4. And step number 5 is financing, right? So these are your 5 steps that you use to calculate change in cash. Now in Maya's case, in the example that we have, so this exists. So let's bold this. There are no cash items, so we will not use this. This exists because yes, of course we have, there is some change in working capital. For the time being, we are not buying and selling anything. And for the time being, we're not borrowing debt and we're not raising equity, right? So that's the starting point for our conversation. So what we're going to do now is we're going to apply this, what we just done here, we're going to apply this to Maya's baseline statement, and I'm going to save this now as file, let me see, 1.6a. So we have cash balances here. We've put in some formula which is obviously not right and incorrect, and it was clearly put in here to misguide you and misdirect you. So we'll update this, that's one. Then where do we do a change in cash? So let's make space for change in cash. So our change in cash position, right? Change in cash. The starting point is net income. Let's put this in. So what is the net income figure? Our net income figure is this number here. And we scroll it. There we go. That's one. Then are there any adjustments? No, there are no adjustments. So non-cash adjustments equal to 0 for Maya. So that's there. So that's step number 2. Change in working capital. For our purposes, we'll simply look at this as the difference between payables and receivables. Oh, actually not payable and receivables, actually inventory and receivables. So this minus bracket open, this plus this. These are the two big elements. And I plug this in. So this tells me there's been, so where does this 250 come from? Take a look at this. This 250 comes from this 360 less 250 and 360, which basically means that we are using about 250,000 in cash, using it, right? And then if I hook this up, so that gives me this number. So my cash needs are actually growing quite substantially over a period of time. And then I have nothing, so I have zero change. So both financing and investment is zero change for Maya. And then your cash transferred to next year, or cash transferred to balance sheet, actually cash transferred to balance sheet, is going to be this number plus this figure. So now there is one error in this, and that error is this financing and investment, zero change for Maya. This is actually not true. It's not true because we have an opening balance of 300,000 in the first year. So we borrowed money from friends and family, and so far as we're concerned, that money stays on the balance sheet. It's not gone anywhere else. So it's a friends and family loans. Basically, they've borrowed money from their parents. Both husband and wife borrowed money from their individual set of parents, and they use it to buy inventory at the start of the cycle. And they've been repeating this for a while, but this essentially is a source of cash. So what we do is we go back here and we say, let's see, this part, right? This part is essentially going to be this number, because this is the starting point for our projections. But every year that follows after this point, it's going to be go up. It's this minus this. So every year after this is going to be 0. So what I do is I go in and plug this in also. And I say, okay, let's add this much, which is plus 300,000, and see what happens. All right, so this is one part. So this is one error that we fixed. There's another error though, and that error is, if you look at the calculation seems a little off to me. And the reason why it seems a little off to me is that while you've transferred this cash to the balance sheet, right? You've transferred this cash to the balance sheet, but is it really how it's working? Mistake is that you have to first link this. So go back and link this to your cash transfer to next year. Where is your cash transfer to next? Where's your cash? This is your cash. There's the balance sheet, right? So you've got this number here. You plug this in. So this becomes your cash balance. This is your net assets, difference between assets and liabilities. There is still a difference. One of the key things that you need to watch out for, it's a cross check, and that cross check is, let's mark this here. What's your cross check? Your cross check is that this calculation of retained earning and this number that you've done here, this should match. So this should be essentially be net assets minus this should be 0, but it's not, and it's actually growing. And the reason why it's growing, so let me explain what I've just done, right? How is this figure calculated? This 694010, how is this figure calculated? This figure is the difference between total assets and total liabilities, right? But this figure should also represent the equity in the business of the shareholders. And where does equity come from? Equity comes from the fact that you've made money or profits. Either you've contributed capital, you have contributed capital, right? Or you've made money and that money has been reinvested into the business, which is what we call a retained earning, right? So I'll add one more line here, and that line would be contributed capital. So Maya hasn't contributed any capital right now, it's just 0. Retained earning is this much, and then I add this figure here, total equity. That's going to be the sum of these two figures if we ever contribute capital at any point in time. Okay. So I have this figure. I have calculation of equity that I have calculated separately, two parts to the same number. I have net asset, which is something I've calculated separately. The two of them should match, but they're not matching, and there is a difference. And that difference adds up. Now, why is that difference coming? That difference coming because there is a mistake in our statement of cash position. And the statement of cash position says, listen, this was your closing balance. This was essentially, if you think in terms of let me add 2 more rows here just to make sure that you understand what is happening, right? The first point is, what was your beginning of year cash position for Maya? 1. Then what was the activity? What was the net change / change during the year? And then what was your end of year cash position? Does that make sense? So we say when we start the year, we started with 0. What was the activity and change during the year? It was this number. What was the closing balance for the year? Closing balance was this plus this. But then this should become the opening balance, right? So this becomes the opening balance. What was the activity for the year? It was this value. And if this is the value, then what was the closing balance for the year? It was this plus this. And then you just repeat this calculation all throughout. There you go. So you now see a cash position beginning of year, and you see a cash position end of year, and this end of year position is the position that you plug into your balance sheet. So now if you plug this in, so focus on these two values, and I'm going to mark this as, okay, so let's focus on this value, and let's focus on this value. So I'm going to plug these two values in. So I'm going to plug this end of cash position back into the balance sheet. I'm going to update the balance sheet calculation. Current assets, there we go. Take this number from my change in cash. And then copy and paste. So that makes things a little better. And then based on this, let's see what the error term is. Okay, not bad. So we've reduced it. There's still a difference. There's still a huge difference. Where is that difference coming from? Let's take a quick look. So you take a look at the trend. So why do you think this difference coming from? Does this look familiar? Can you guess where this is coming from? So look at this number, 265,407. Does this look familiar? 265,407 is, look, there you go. So it's not completely there, but it's 250,407, 526,132. So that's one component. That's a large component. And the reason why this component is coming in is if you look at your change in, if you look at your, where is it? Look at change in working capital position, right? 250,407. If you trace this, what's happening here? So you've got receivables and you've got changes in inventory. Correct? Does that make sense? So you got these two components, and then you got payables, and payables is 360,585. So what do you think we should do here? Are we using cash? Appears like that we're using cash. But the difference here is indicating that that may not be the case, right? There might be something else wrong. All right, so we've already factored inventory in our calculation. What else is there that we've missed out? So we've got our receivables, we've got our inventory, we've got depreciation is flat, bank credit is flat, friend and family loan is flat, payables are growing at a certain rate and they've been captured, total liabilities are there correctly. So take a look at your fixed assets. If you look at your fixed assets, what's happening in your fixed assets? Are you buying and selling anything? So if you look at your fixed asset position, there is a change. If you sum this is 105, and you can clearly see that there has been a reduction, that these are reducing. So vehicles net of depreciation, so there is an impact that's happening here, that's coming in some place, right, which is reducing the value of the asset. That's one element, but it doesn't add up. So it's certainly a component in the calculation, and it will certainly improve our math and numbers. but it won't cover the magnitude of this error. This is something else. So there is either a mistake in the calculation above in the model, or we're missing something. So your error still exists. All right. So the purpose of this exercise, the reason for this illustration, was to give you a sense that if you don't have a statement of cash positions, if you don't have it structured correctly, and we've just built an approximate one because we actually don't have a lot of data, there is a reasonable chance that both your balance sheet and your P&L are going to be out of whack. And it's important to build that correctly, right? We've just built a makeshift one, right? We haven't sort of made account for depreciation in fixed assets, one. So that's one element. So this non-cash, zero non-cash adjustments, if we fix this, it will simplify things a bit more for us. Financing and investment for Maya, we've only again done a makeshift arrangement here. We need to fix this to get to the next stage. And then this fine is fine. The beginning of your cash position was 0. We've transferred the cash correctly. That is fine. I think the other thing that we've done wrong here is this. Where is the shareholder position, right? This also we need to break into what we call a 3-line format. So ideally what you want to do is you want to say, let me just explain this one more time. Actually going to say so I'm going to say beginning of year equity change during the year and end of year equity, right? So my beginning of year equity value is going to be 0. Change during the year is going to be your net income figure, this figure here, and my end of year is going to be this plus this value. It's going to be this plus D7, right? And then my opening balance is going to be this one. End of year is going to be this one. This is going to be this one. And then I scroll it across the board. So my end of year figure is the figure that I want to look at. And my comparison, the cross check that I do with respect to net assets is also going to be based on this figure. So it's going to be net assets here minus 719. All right. Okay. So now, one of the points, the reason why I wanted to emphasize this specific stage is that the reason why we want to use this 3-line format is because if you want to trace what has gone wrong, if you want to understand what the mistake or the error in your calculation is, then the 3-line format makes it very easy for you to understand where the differences lie, if an error has been made, if there's a problem, or if there's an issue. So we've done that for retained earning and equity, and we've done that for cash. Okay. Unfortunately, our numbers are still off. There is still a difference both in net asset and equity calculations, but we'll solve this when we address GEMS. In the Maya case, because we don't have sufficient data, we don't have sufficient detail, and because we haven't sort of structured and created the balance sheet properly, we haven't given it that level of attention and detail, right? There is going to be an error, there's going to be a problem, and that's perfectly all right. That's perfectly fine for a first pass. The purpose of the exercise was to illustrate two things: showcase you how would you calculate or estimate or update or drive the statement of cash, the change in cash. Second, showcase, building these 3-line formats, adding these simple cross checks that can give you a sense of whether your numbers match, whether they balance, whether they tie in, and then walking you through the process of calculating the statement of cash position.